All right, so let's look at a scenario to finish up our second handout. It says here, we've got a lot going on here, looks like. It says on March the 15th, Monroe sells $9,525 merchandise on account to Garrison Brewer with terms of $210 net 30. Cost of goods sold was $6,905. And it says here, journalize the sale and the recognition of the cost of the sale. All right. So, now we talked about earlier the fact that when we offer purchase discounts, that if we do not take the discount, we are paying a lot of interest. A 2% discount on 10 days, we're essentially, if we wait and pay this bill in 30 days and we pay $9,525, we're essentially paying 36.7% interest. Okay, it's not interest on top of this, but what we're saying is only a fool would not take this discount. So if we pay this, we're actually paying interest to the tune of 36.7%. So with that said, let's assume that we are going to take this discount, or that Garrison Brewer is going to take this discount. And so let's see here, 9,525 times, it's 2% discount. So what I'm going to do is I'm just going to multiply this by 0.98. And if I do that, I'm going to say, okay, Garrison Brewer is going to pay this within the 10-day period. So my actual sales amount that I'm going to recognize here is going to be $93.34. So A is what we're working on here. And again, notice it does say on account. Okay. Otherwise, if it was cash, you would just get the discount for sure, and we wouldn't have to have any discussion about it at all. So I'm going to do a little bit of abbreviating here. Accounts receivable for G. Brewer. Okay. For that amount. Okay, and that's going to be our debit. What's our credit? Well, it's merchandise. So sales is going to be our credit, and for the exact same amount. Okay, but that's only half of what we have to do, because this merchandise cost Monroe $6,905. Now that's what Monroe's cost was, so we don't have to adjust this figure at all. Okay, so we're going to have to expense $6,905 of inventory, and we do that. It gives us the answer right here, cost of goods sold. So that is our debit. Again, I am going to abbreviate. Cost of goods sold is going to be our debit for the $69.05. $69.05 is also going to be our credit. What are we crediting? We're crediting inventory. Inventory went down, we expensed it to cost of goods sold. Okay? And that's all we have to do for choice A. It says B, on March 20th, that's 5 days after the fact, a credit memo was given to Garrison Brewer due to merchandise that was the wrong color. Journalize this event. The cost of the returned merchandise was $65. So there's nothing wrong with this merchandise. It was strictly the wrong color. So that makes things a little bit easier for us. It really. So we have our B here. So what do you think? What is going to be our debit under the accrual basis of accounting? Well, Monroe would have set up a liability under customer refunds payable, anticipating that some merchandise would be returned throughout the period for a variety of reasons. So he set up that liability, customer refunds payable, with a credit. Now, when Monroe Sales actually takes some of this merchandise and they actually have some returns, they have to reduce that estimate of liability. So our debit, which reduces our liability that we set up, is customer refunds payable. Okay? We are forgiving part of the amount owed, so we have to reduce this. We have to reduce this accounts receivable because we're not gonna be getting all of that money because some of the merchandise was returned to us. And let's see here. It says $125 credit memo. But wait, we have to remember that, or we have to acknowledge and figure out that this $125 credit memo is based on the list price. This $125 is embedded in this $95.25. So we have to take this $125 and we also have to multiply that by 0.98 to reflect the 2% discount here. And if we do that, we come up with $122.50. So we're going to debit customer refunds payable for $122.50. And we're also going to credit this accounts receivable for $122.50. It also says up here in our set of facts, let's see here, I gotta keep moving this around. It says the cost of the returned merchandise was $65. So we're not completely done yet. We're going to take this inventory back because, remember, there was nothing wrong with it. So we're just going to debit our inventory and we're going to credit estimated returns inventory. And because we're dealing with cost here, we don't have to make any adjustment to that. $65 and $65. I do realize that my lines are not exactly straight. My setup, I have to reach quite a ways to fill this paper out, so I do apologize for that. But this fulfills everything that we have to do for requirement B. And then we have one more requirement here. Let's see what it says. It says, on March the 25th, Garrison Brewer submits payment in full, journalize this event. Okay. So, originally Garrison Brewer owed $9,334.50, of which $122.50 was forgiven because Garrison Brewer returned that merchandise due to it being the wrong color. So that leaves a total amount of $9,212. So they paid that. So from the perspective of Monroe, they're going to debit cash and they're going to credit the remainder of the subsidiary ledger account for Garrison Brewer, 9212 9212. Okay? And that's it. We have fulfilled everything that we have to do. I will point out one thing, and that is that in the interest of time, I did not include any journal entry explanations. If I had done that, that would have taken a few more minutes, and we try to keep these videos as short as possible and still get across all the pertinent information. Okay, that's it for this video. We'll get another one up soon.